Hi there, and welcome back to the Money Effect, where I bring you all topics, news, finance, and money related. Now that's out the way. Disclaimer: this is just for educational purposes. Now that's out the way. Let's go. What's been going on this week? And right now we can see what's been going on this week. This transitional
Month of
inflation that we've been talking about. That I said would be the main topic this year. If you go watch the previous videos, I said this is what we're going to hear this year. These policymakers say this is going to be transitional inflation, where it's not, and it's still going. And now we've literally hit into a 40-year high, and there's going to be a lot of pressure on the Federal Reserve right now because you've got the banks are in a delicate position. You've got banks that say, they want to control inflation. The logic is you raise interest rates, people have to borrow more, people spend more, inflation comes down. But the problem is now if you raise interest rates and we're already seeing people, let's look at the petrol, go to the petrol, it's doubled. Literally since the COVID lows, we've literally doubled. What was costing you £100 a month to fill up your tank is now £200. So now that if you start putting up interest rates and now you have to start paying more mortgages, that's just gonna make things worse, right? So I mean, these policymakers, they've got a key aim. What do they do? And I feel like if you're stock investing, once we start seeing inflation peaking, this is for the next kind of rally. Assuming we don't go into a recession. If we go into a recession, then it's a different kind of ball game, and that's kind of what we're talking about now. But if we don't go into a recession, you're going to see. We need to see when does inflation peak, when it starts going low on its own. Because if it doesn't keep going low on its own, the Federal Reserve, Bank of England, European Central Bank, they're going to feel that they have to keep increasing interest rates. And realistically, I'm not a historian, but any time in history they've done this, it's caused a recession, it's caused stock price to crash, and that's what we're seeing now. So that's kind of the main macro picture. That's what you need to keep an eye on that inflation especially if you're investing in stocks. When you start seeing talk of inflation is going down, then we're going to move on to a next topic. But right now, inflation ain't going down, so this is what it is. In some good news though, if we look at some Chinese stocks, now we all know Chinese stocks, they were kind of very hit hard. Obviously they're going through all of this stuff with the inflation, but they also had a lot of regulatory issues where that Jack Ma, the head of Alibaba, disappeared. Well, allegedly, there's a lot of stuff they've been going through. So, but we've had the Chinese COVID. They're letting people out again now, so the supply chains are easing. The government regulation crackdown seems to be easing. Central banks seem to be wanting to pump money. America actually talking about Chinese imports, taking away those tariffs in the Trump area. So potentially, the Chinese stocks, if you're into like Neo, Alibaba, even if you just want a portfolio of companies like Fidelity China Investment Trust, that's a good one, to track those. And if you see how low they've gone, it's definitely a good time to start looking into them. Now, one company I'll say, Diddy, I'm not saying invest in this company. I'm just saying, if we just look at what's happened, you know, within the last, we was at one and we've literally doubled because they feel that they might the regulations have come to some sort of conclusion. So I think in China things are starting to open up again, and a lot of their stocks are dead cheap. Is this the end? No, but if I would definitely start looking and potentially start picking up a position, or just start looking. Just this is what this channel's all about, just to give you that insight. And yeah, China looks like they're trying to come out of the abyss. So have a partial look. Have a partial look. In terms of cryptocurrency, kind of the same. Crypto, unfortunately, cryptocurrency is, I believe, something for the future, something that a lot of people will be using in some kind of technological form. I'm definitely a big believer in it, crypto, but unfortunately, it's not been able to decouple from the stock market. That's going to be a big thing for crypto if it ever becomes viable. You know, we've had a lot of talk about Bitcoin. We'll stay with Bitcoin being you know, a digital version of gold. It's not acting like that at the moment. These are times where uncertain times in everything, and Bitcoin just keeps on dipping. So it's not acting like a digital version of gold, because gold, in theory, should be going up at all. It's just acting like a stock market, and it's acting like a growth stock at that. And anytime we're seeing these high inflation numbers, high interest rate numbers, we're seeing crypto decreasing, and you're seeing on the screen now what's going on. So, like I said, there's some wonderful crypto projects. They're such at low prices. If you're somebody that's trying to hold these cryptos for years, then I mean, now is not a bad time to get into it. But I still feel there's more pain to come ahead, and I feel there's more pain because I think inflation is just going up. And now, one thing I'm not factoring in is that inflation is going to be like this for the next few years, because that's going to be a real big problem. I feel like, once we get through the Federal Reserve and, assuming Russia doesn't do anything stupid, I think maybe the end of next year, 2024, we'll hopefully start seeing some low inflation, and I think all Bitcoin and all these things will start rising off of that. But at the moment, these products are just going down, 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 down. And like I said, you can average in, you can dust color average in, but if we look at Bitcoin chart, look, in 1 year, look what it's doing. Year to date, we did have a little rally, but instead it's going down. I can see this going down even lower, to be honest. So it's all about inflation at the cryptos at the moment, but there are some wonderful projects out there. I won't get project specific, but there are some wonderful projects. So yeah, this is just a quick roundup, really, because it's just about inflation right now. That's what the story is. Interest rates and inflation. Next we've got the central bankers meeting. It's going to be the same kind of theme. So just keep an eye on that, especially if you're in this market. This is the money effect signing out. Peace.